All right. Good morning, everyone. Welcome back to the Tim and Tim Show every Tuesday at 10 a.m. Eastern Time. As you can see, this week it's just me flying solo today. I do enjoy doing these solo shows from time to time, and I think this week I got a good topic that I want to talk to you about, and it's something that became extremely relevant to me last night. Um, I'll tell you a little story. We're working through a refinance. And it's a tech property, surprise, surprise. And one of the things that the lending broker was asking me was an explanation of how the tech rents and our rent restrictions and our tax abatement and all of that works in conjunction with each other. Because he's like talking about how these rents are a certain level, but yet you're telling me a different level. Why is that? So I went into this really extreme breakdown and broke it down with the math to explain very intricately how we're able to make sure that we stay in compliance whenever we're doing these tech deals and the nonprofit tax abatement deals, but how we're able to increase our rent and still be in compliance is definitely an art form. And my final line item to him as an explanation was that this is where becoming an expert in your niche is super, super important. And that's kind of where I want to go is this is part one of the skill sets that makes you a good investor is being able to identify your niche, right? And let me explain a little bit of how Tim and I found our niche of tech deals is the skill set that will absolutely help you identify your niche and make you a great investor compared to just a good investor is being able to identify a pattern, right? What we were able to do and accomplish was identify a pattern of access to properties and benefits that helped us make deals work that other people couldn't see, right? And what does that mean? What does that mean? And how did we get there ultimately? And then the best way that I can tell you that in order to develop that skill set is you got to put in the reps, right? You got to underwrite a lot of deals. Um, you got to underwrite deals. You got to keep track of those deals. You got to make sure you're seeing what they sell at. You have to be connecting with other people that are doing what you want to be doing. And the more you start to do that, the better you're able to identify a pattern. Because at the end of the day, when you identify that pattern and you can replicate it over and over and over again, that's what you want to focus on. And I think one of the problems that a lot of people get caught up on is that they see people making money in so many different facets of commercial real estate, self-storage, development, multifamily, conventional multifamily, affordable multifamily, all of those different types of asset classes that yes, you can make money in, but it's because those individuals that are operating them well, they developed the skill set to become niche in that specific asset class because they put in the reps and they could identify the patterns in where they could make money, right? This is the precipice of the whole thing, right? Is how do I make money with this skill set that I've now learned and developed? And it's not something that is inherent, it's something that's learned. It's something that you have to put in the time, you have to put in the effort, you have to want to try to be able to figure out a problem. And we've talked about this before, and I know I say it over and over and over again is, hey, good morning, Joe. Good to see you. One of the things that we talk about all the time is being able to solve other people's problems, right? And it's if you can identify the pattern and what somebody's problem is, you're going to be able to exploit that, right? Um, I do have a couple talking notes here. It's like, the way that we were able to identify our pattern was through underwriting deals, right? I mean, that me specifically, right? I mean, that's I'm not really talking for Tim Vest here, but I am talking about myself. Is that's how we're able to identify good deals is putting in the reps and being able to identify good deals through the underwriting process. But that's not the only way that you can develop a skill set that makes you a good investor or a great investor. There's other things like look at Sam Silverman, for example, is a great example of somebody who became an expert in raising capital. That's all he does. Um, you know, uh, being specialized in property operations or raising capital or underwriting deals or doing due diligence or being the construction guy and running your construction company as part of your your total equity group when you're doing these commercial real estate deals. Any facet of that is important, and the only way to become an expert and a great investor is is to identify the pattern and exploit the pattern. And exploit might be a tough word, right? Maybe I don't think it's exploit, right? It's you've put in the time and the effort to be able to identify what can make you money, and everyone else is just sitting on their hands waiting for a handout. And the difference between people that are going to make it happen and the people that are never going to do anything is they take action and they study the patterns. And that gives the individual confidence to move forward in a deal. Any deal, right? I mean, I use deal, it covers a lot of different, covers a lot of bases there, right? I mean, it could be a deal, it could be a job, it could be an individual, right? If you're raising money from people. I mean, there's so many different things, right? Look at some other examples, Warren Buffett and Sam Zell. I mean, a lot of those people, everybody knows who Warren Buffett and Sam Zell are. I mean, Warren Buffett's been in the news quite a bit lately as he's sold off major. Hold on, I gotta mute my phone because I keep getting these ding notifications and it's driving me nuts. Hold on. There we go. I muted it. Or what I need to do is put it on do not disturb. There we go. Put it on do not disturb. That's better. Sorry, I lost my train of thought. Okay, Warren Buffett, he's been in the news quite a bit. You know, he sold off a lot of his portfolio in the Berkshire Hathaway. And he transferred from, correct me if I'm wrong, somebody can look this up, but he moved like his A class shares to B class shares or something like that. He also donated a lot to charity and also to his family members and things. Sam Zell, who's passed away quite a couple of years ago now. I can't remember exactly when he died, but he's one of the most successful investors and came over, to the United States with nothing. If you've ever read his book, incredible book to read. But Warren Buffett, I mean, he noticed patterns in the stock market. He didn't make most of his money, his billions of dollars of money, until he was in his like 60s or 70s or something like that, because he spent his whole life identifying these patterns and practicing his trade. And his trade was investing in the stock market. And he's incredibly successful. Warren Buffett is a household name at this point, right? But it just goes to show that it doesn't matter what you're doing. If it's real estate specific, it's business specific, if it's stock specific, like trading options or just long-term investing, Bitcoin and cryptocurrencies, you have to be able to identify the pattern and know when is a good point to buy, right? Right now, I think right now is a good time to buy Bitcoin. I personally myself just bought like $15,000 worth of Bitcoin. It's down to like the low $90,000 range, and I was talking to my brother about it, and I was like, you know what? I'm just going to put my money in here because it could go down lower, could go up some, but at the end of the day, I'm feeling like a long term, 6 months or a year from now, it's not going to matter because it's going to be a good entry point. But I noticed the pattern after talking with a couple experts in the field and talking about where are they seeing the different price levels and what they think are good entry points. I did some due diligence myself. I pulled up some charts. I kind of verified some of the information, and I tended to agree with them. So I made a decision. I moved forward with it. And now, 6 months to a year from now, I'll look back and hopefully I made the best decision because Bitcoin's going to go to $1 million. I don't know. I don't really care. So again, it all comes back down to being able to identify patterns in what you specialize in. And it's a skill set that's learned ultimately at the end of the day, right? Putting in the reps, and it's putting in the reps over a long period of time, but you can't just do, like, if you're trying to get started in the commercial real estate world or any kind of real estate facet, right? Flipping houses and things like that. You can't just like underwrite one deal a week and say, oh, well, I'm putting in the effort. And no, it's, there's going to be, it's like kind of going to the gym for the first time. The first couple of weeks that you go to the gym, you feel really weak. You might feel sick after the gym. Your body's like in shock of, oh my God, what are you doing to me? I haven't exercised like this. I'm out of breath, right? You got to have to go through a bit of a sprint where you're going to learn a lot of information. You're going to drink from the fire hose and you have to apply what you're learning. looking at a deal a week is not going to get you to be able to identify a pattern. It will get you familiar with a lot of terms and definitions and a bunch of other things, right? But at the end of the day, you're not going to be able to identify patterns because you haven't put in enough reps at that point to be able to clearly identify the pattern and show, like, document and show and proof, right? Like, hey, I've seen this before. This is what happened. I've seen this before. This is what happened. I've seen this before. This is what happened, right? And ultimately, that's how we got into the LIHTC space. Is we were able to identify and see that every time we found a LIHTC deal, we applied our business model to it that somebody mentored us on and kind of introduced us to, right? But we took action with that information and we moved on with it. It's not like we just sat there and did nothing with it. And we started to notice the pattern of like, hey, what this guy told us is replicable and we can solve this problem and we can do all of these different things. And every time we do it, it works and we make money and we like that. And it became easier and easier and easier and easier. And now we can see it from a mile away. And we couldn't have got there without putting in the reps of underwriting the deals, analyzing the deals, talking to other people that are doing it in our field, and actually putting it to work, right? Like we bought a deal, we applied our knowledge, we're doing all of the things that we identified as a path to be able to create value with a property and provide returns to our investors. And it just takes time. It's not something that you can have overnight, right? So it's important to make sure that you're building up your memory bank of deal flow, of analyzed deals, of thinking critically about what pattern are you looking for? What are some of the measurement tools? What are some of the indicators, is a good word, that indicate to you that now is a good time to buy, or now is a good time to say yes. Stocks, obviously, when it's really red and stocks have gone down quite a bit and it's a good stable company, like if Apple drops 20% tomorrow, I'm going to liquidate a lot of stuff and buy Apple stock, right? Because I know Apple's not going to go anywhere. Fundamentally a good company, household name. When you see something go on discount like that, that's usually a good time to buy. I feel like that about Bitcoin right now. That's why I bought some of it. Though historically, I will tell you, I'm not like a cryptocurrency investor, but now's a great time to buy. So I was like, I'm an opportunist and we'll see where that goes. You have to study your failed assets. And I'm not saying failed deals. I'm saying failed thought processes in applying a pattern, right? Because what you have to do is you have to think critically about something and then you have to try to identify if your critical thinking actually came to fruition. And the only way you can do that is by tracking some of the things that you've looked at over time and validating your points, right? Validating, if I had made this decision when I thought about it, what would have happened, right? So now you have identified your entry points. You've identified how you're going to increase the value. You've identified how much money it was going to be able to make. Now you can apply that to new deals that you're looking at, to new jobs you're looking at, to new stocks that you're looking to buy. Whatever the pattern is for whatever asset you're trying to do, good investors don't just invest in real estate. They invest in a lot of different things, right? And good business owners too, right? I mean, you're investing in your business. You're investing in the systems and processes to grow your business and make money. And you have to continue to identify, where does my business solve somebody else's problem and that I'm able to make money on it, right? What are some of the patterns that you see in your markets? I mean, whether it's a market specifically, or if it's some stocks that you're interested in. I'm curious to hear from you guys what you think are some trends that you're seeing in the markets or your real estate classes, or asset classes that you're in. What are some of the things that you're starting to see? I can tell you, in the development space, because we have a property under contract that's being sold to a developer, for the last 2 to 3 years, there really has not been a whole lot of development activity. A lot of vacant land has been sitting for quite a while. People that are buying properties to redevelop them wasn't happening as frequently as it was before. But development's kind of a long tail, right? It takes a long time for somebody to start a multifamily apartment complex building. Many years. 2 to 5 years is not uncommon for real estate development to occur. And When the market started, this market sentiment started to change in terms of interest rates and insurance costs, that's when we started getting hit up by developers a lot, right? And the pattern started to clearly show itself that if you look historically, that after a recession, not a maybe, sorry, maybe a recession is a bad word. If you look historically after there's been a downturn in a market, developers generally are the first ones to kind of fall off of development train, right? Because they have much more of a horizon looking over. And when you start to see that the sentiment in the market is getting better and that the confidence is growing, that's when you start to get a lot of activity from developers because they're like, okay, I'm going to start a project now. It's going to take me 2, maybe 3 years before I break ground on that project. It's going to take me about 2, maybe 3 years to develop and build that project and then sell it. So they're looking at what is the optics, what are the futures looking like for a development project in whatever market that they're working in. That's something that we've noticed very recently. One of the other patterns I'm starting to see is that distressed sellers uh, are way more open to receiving information on different offer structures, right? Before, like in 2020, 2021, 2022, nobody was really open to seller finance deals because they could just sell the property and get whatever they wanted for it, right? But now the trend and the pattern that I'm seeing in sellers is that they can't get the price that they want to, and in order to get the actual selling price that they want to, they're willing to do some level of creative financing to achieve that price. And as a buyer in today's market, that helps me reduce the amount of equity that I have to bring to the table. And by reducing the amount of equity brought to the table, increases the equity multiples and the returns for the people that are participating in that deal, right? Because bank debt is expensive right now. I mean, they're not really that expensive. Let's stop using that. I mean, we're getting bank loans in the private banks and credit unions between like 6.25, and we're getting agency takeout loans in the low fives, which I'm comfortable with all day long. I mean, if I could get bank debt in the 5.5 to 5% range, would be a whole lot better, obviously. But the agency lenders being at that 5% level is really good debt to be able to take on and kind of weather a long-term storm. I don't believe that we're going to see 2-3% interest rates again. It's just not going to happen, in my opinion. The wheels of the economy really have to fall off. The job market really has to fall off if the Fed is going to continue to reduce rate that much, and then the Treasuries also follow the rate down. So those are some of the patterns I'm seeing. I see patterns all over the place. Insurance costs. If I mentioned the insurance costs, we're starting to see a lot more insurance companies be open and willing to negotiate price. How do you negotiate that price on the insurance? Is you negotiate the replacement cost. So replacement cost, 2020, 2021 was like $100 a foot or less. Today, we're seeing a lot of replacement costs in the 140 to $150 per foot range. So you can see there's been, just since 2021, a 50% increase in the replacement cost alone. It's not the only factor that goes into your insurance cost, but a major one. But some insurance companies are willing to say, well, hey, if we're not willing, they might quote it at 175 a foot replacement cost, and we might negotiate down to $1.35 or $1.40 or something like that. And then that's how you're able to reduce the cost. The insurance market is softening, and that pattern that I'm seeing is that people are willing. They're I'll say it like this. There's kind of a lot of posturing going on from banks and insurance companies. And if you ask the question, then you're likely to get at least something that's more favorable in your direction. A couple of years ago, you really didn't have a say. It was take it or leave it, buddy, kind of sentiment. But that's not really the sentiment anymore. So make sure you're trying to leverage those hot buttons and negotiate pricing and negotiate anything that you can right now. Obviously, with the economy not being the best, with the jobs reports not being the best, people are, hypothetically based on the data, as businesses are struggling to make sales and increase revenue. So having some revenue is better than no revenue in a lot of businesses. So use that to your advantage right now because you can get some really great deals on service contracts, on insurance contracts. We use that with pest control companies. We use that across the board. Landscaping companies. We use that across the board because people don't really want to lose business. But if you, as the buyer and the consumer, are willing to shop around because you see a pattern that other businesses are willing to compete for your business, that's something that you need to be able to identify and leverage. That you've identified the pattern, right? This whole thing, that's all we're talking about. You've identified the pattern is that if you push back on the price, they're either going to be willing to work with you or they're not. And if you go out to the market and you're willing to see and do the work and do the due diligence and see if you can get something at a better rate or better price, then you should be benefited by that. Because I think that over the last 2 years, a lot of prices had gone up astronomically because there really was no pushback, right? It was, I need this and I have the money to be able to do it, so I'm going to do it. And then a lot of businesses got comfortable with charging high rates. One good way, one thing that I like to think about in that regard is the car market. As interest rates continue to go down, no, sorry, I mean that is one thing, but what you saw during 2020 when there was a chip shortage and supply chain issues and all that kind of stuff, it was difficult to buy a car, and dealers were putting markups above and beyond MSRP. And for the longest time, it's like, what do you mean you're going to pay MSRP or even above that to get a car? Because historically, you never paid MSRP. I mean, and clearly can think of a Family Guy episode where he's talking about negotiating with his car dealer. He goes, I got a great deal. I didn't pay $1 over MSRP. And this was like in 2013 or something like that, right? And it was like, well, nobody pays over MSRP or even MSRP, so you didn't get a great deal, you knucklehead, right? But now you're starting to see a lot of dealers. The pattern is that the price adjustments above MSRP are going away. Lots are getting more full. Less transactional volume is happening. Loan rates are continuing to drop for not just like third-party bank lenders for car payments, but for actual dealers, right? Like Ford, Toyota, all of those types of dealers. They're starting to offer incentives to bring in more buyers, more transactional volume, and they're offering lending at very low rates because they need transactional volume. That's the pattern that you're seeing, is that they're struggling with sales. So that gives you power as a buyer and as an investor, and obviously using an investor lightly, as in, you don't invest into a car generally, but being able to identify the pattern of when is a good time to buy something, you can apply it in every facet of your life. You can apply it in your real estate business, in your business, you're buying cars, buying liabilities. I used it to buy the house that I'm sitting in right now. Sitting on the market for a couple of weeks. There was no traffic. The price reductions were happening. We threw in an offer of like $100,000 less than what he was asking in order to get the conversation started, and it worked, right? I mean, there was a pattern there of the price coming down. There was a pattern of no traffic. There was a pattern of this guy needs to get out of this house, so we're going to make an offer and try to get a great deal on it. And I think we did get a great deal on it. But you use that in every facet of your life. Being able to identify patterns, because what happens let's kind of flip the conversation the other way, is if you become a bad investor, what are some of the things that make you a bad investor? And I can tell you right away: trading or making decisions on emotion. When you get emotionally involved into a deal, if you get emotionally involved into a car, into a house, you fall in love with it and you got to have it. Everyone's felt like that. I mean, the boat that's sitting in my driveway right now, I had to have it. And I paid overpriced for it. I'm super underwater on it, right? Funny to say about a boat. I'm underwater. Not a good place to be on a boat underwater. Side note, I make myself laugh. But I had to have it. So I overpaid for it, right? If I was patient and I was willing to find a great deal, I probably could have saved couple $1,000s, maybe tens of thousands of dollars. And at the end of the day, it's water under the bridge to me. I enjoy the boat. I use it all the time. But at the end of the day, I got emotionally invested to wanting a boat, and we bought it, right? And it's not something I made money on. I definitely have lost money on this deal, Now it's an upgraded lifestyle and kind of fun activities to do. But I just use that as an example. So one of the good decisions that I did make was I bought my truck during COVID. Um, during the heat of COVID, there was no transactions. Dealerships were struggling to get people in the door because nobody wanted to leave their house or nobody could leave their house. I found a truck online and I reached out and I negotiated it over the phone. They offered me 0% interest. Sorry, it's 0.9% interest for 84 months. And I got it for $10,000 less than MSRP. I got a fantastic deal on the debt and the price of that truck because I was patient and I wasn't emotionally invested to buying the truck. And I bought it because it worked out. That's the mindset and the mentality that you have to have when analyzing any type of deal, where real estate deal, business transaction, stock investment, right? Bitcoin, whatever it is, right? So I'm just trying to illustrate with my own life experiences of how I've learned to identify when I'm emotionally invested into something or when I'm trying to make a good long-term decision. I have to make sure that I'm not emotionally invested into it. Again, comes back to why I like underwriting because it's just numbers at the end of the day. At the end of the day, it's numbers. And if on paper I can calculate with some level of certainty that I'm going to make money on a deal, I'm probably going to do it. The last thing that I do is I go visit the property. Usually Tim Best does that because I don't want to see it. I don't want to see how pretty it is. I don't want to see how good the location is. I want to see on paper first that the maths. It's got to make money. It's got to be a good investment first on paper. And then all of those other things also come into play, but I don't want to fall in love with it before I do the underwriting because then that's when you find yourself in a little bit of a predicament of like, well, maybe we could push this a little bit because I really want this deal to work out kind of thing. I try to avoid that at all costs. And that's how I've been able to identify the pattern within myself is to make sure I like the underwriting first. So, um, all right. That's all I got to say about what I think makes a good investor, a great investor. It's being able to identify the skill set of patterns in whatever you're looking to acquire or build or buy or invest into. So if you're watching this show later, leave a comment in the comment section. I'm curious to see what the patterns are that you look for that you've been able to identify. And I'm a big believer in you can give everybody the keys to the kingdom and tell them what their patterns are, but actually being able to do something with those takes takes another level of individual to actually take action with it. So I share the wealth. So if you're ever curious about what are the patterns that we identify and that we look for, happy to have a conversation with you and help you out. Maybe see if this is something that maybe you want to get into. So, all right. See you next time. Peace.